Stocks see a broad-based gain along with advances far outnumbering declines. It's the oil and gas and metals that lead the surge, while financials remain the big laggards.
The government, following multiple representations on the subject, has allowed grandfathering of all property purchases before July 24 by allowing sellers to opt for indexation benefit on sales. Realty stocks see a relief.
Pharma dips on a big miss in revenues and margins. Bata skids on weak summer sales, and Fusion Microfinance slumps after credit costs surge. But Lupin gains on posting sales and profit well ahead of estimates.
Jefferies Global Head of Equity Strategy Chris Wood tells CNBC he is tactically cautious on India, and if he were to allocate $100 to the market today, he would invest only a third and hold the rest in cash. But even as he is cautious on valuations, he calls India the best fundamental story over 10 years.
The Reserve Bank and its MPC are expected to keep the repo rate and the withdrawal of accommodation stance unchanged, with two members dissenting. The market will watch if the feared slowdown of the US economy makes the RBI sound a little more dovish.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Manglam Malu. Well, we are building in terms of gains today, so no problems coming in. We have the Nifty, which is above 24,200 as we speak. The mid-cap index, which is outperforming as well. So we have the mid-cap index, which is up around 1.8%, and an advanced decline ratio, which is in positive terrain. But it is a lot about stocks today. So we have a lot of stocks to talk about from the real estate space, such as DLF and Brigade, which are buzzing. ONGC, Oil India from the oil and gas space, Cummins, which is post the conference call up at the high point of the day, Fusion Microfinance, Gland Pharma, Lupin, Bata, just to name a few. So it seems as though there's a lot of stock-specific action, but not to forget, we have the RBI policy outcome tomorrow. So I think the street will brace themselves for any kind of indication on what the RBI would want to do, especially with so many factors such as what we've seen in the equity markets, the Fed possibly becoming a little more dovish before time, and the rupee at record lows.
All right, we take that point, Ekta. Thanks a lot for that. In fact, we're doing well. We're holding on to key levels, but importantly, the Nifty bank continues to weaken. So that's something we'll watch out for as we move on. A couple of these discretionary names are doing well in today's trading session. Case in point, Zomato's bounce back. Trent is doing well. We have Jubilant FoodWorks, which reports its numbers towards the end of this week. That one spikes too. And as we can see, AIA Engineering has approved a buyback. The board has approved a buyback for 500 crore rupees at about 5,000 rupees a share. The stock has seen a smidge of an up move right now, or thereafter, after the news has come by, actually has seen a bit of a decline. Maybe the street does not like the quantum of the buyback size, 500 crores. The price is at a fair amount of premium to its current issue price as well. But like this morning, we had Symphony tell us that a lot of these companies are going in for buybacks as they have that arbitrage window between now and September 30th. Let's talk about some of these earnings itself. Arvind Fashions reported a good set of first quarter numbers. The revenue and margin came in healthy. The company expects growth acceleration to continue as well to compare with FY24 levels itself. So to discuss more of this, we have with us Kulin Lalbhai, who's the VC and non-executive director, joining in. Thanks a lot, Kulin, for joining in. Congratulations. It was a good set. In a tough quarter, 10% revenue growth, no mean feat out there, with improvement in EBITDA margins too. The question then that begets asking is that once the tough period is over, ahead of the festive season, and right as the monsoons are pretty good, etc. as well, what are you gunning for the entire year? I mean, your typical guidance is 10 to 15%. Do you think it'll be more 15 than 10 for the full year?
I think it's still a little difficult to give midterm guidances. I think what we are happy about is that a lot of our growth drivers are now kicking in. So one of the growth drivers for the company is net square footage addition. And this quarter, we were able to add almost 50,000 net square feet of retail space. And we believe that we have a very healthy expansion pipeline this year, as we're going to open more than 150 stores. That will definitely help in growth. We also have certain new categories which are growing very well. Our footwear business, our innerwear business, and our women's wear business are all three of them are growing extremely well. So I think those are also gaining momentum. And as you very rightly said, I think the first quarter was subdued because we had very few marriages. I think the whole consumption of apparel got impacted. And we do believe that quarter 3, quarter 4 where a lot of the marriages this year are concentrated, it will definitely help perk up demand.
Okay. Colleen, hi, welcome to the show. So for Q2 and Q3 then, can you better the growth that you've seen in this quarter, which was a revenue growth of around 10-odd%, EBITDA growth of around 23-odd%, margins of 12%? Give us a sense in terms of what we can expect when it comes to numbers in Q2 and Q3.
I think currently we should expect a revenue run rate which is similar, and we do expect as we exit the year it should accelerate. But from a very short-term perspective, I think a revenue print close to where we are today, and we are guiding 100-ish basis point improvement year on year in our EBITDA margins. So versus last year's Q2. That's the sort of guidance as our operating leverage kicks in, and we've also seen our gross margin constantly improve because we are focused on full price sell-throughs and productivity. So because of those advantages, we are expecting 100 basis points improvement year on year in our EBITDA margins.
All right, Colin, we'll talk about your business at large in just a bit, but since we have you with us, we'll speak through you for the industry as well. Yesterday, we saw a lot of these garment makers see their stock prices being bid up largely in hopes of business coming to them on account of the uncertainty that's there in Bangladesh. So what was China plus one, say, a year ago for a lot of the electronic products, etc., and manufacturing, may now for the textile industry turn out to be Bangladesh plus one. How do you see this as a possibility, and do you think we're ready for that? If yes, what's the kind of opportunity that comes about?
I think, in the short term to expect very, very large changes is not very likely. But I think in a medium term perspective, this definitely positions India as a much more stable, predictable sourcing destination. And I think that is good for the country. I think our main focus should be how we can make our garment exports move from its 15-16 billion where it is stuck since a while. And how do we double it to 30 billion? I mean, Bangladesh, just to give you a number, is close to $50 billion on garment exports. So India is, as a full country, 1/3 of what Bangladesh exports. So the opportunity is very big. As you rightly said, we'll have to execute on putting together the capacities and having an efficient sort of at-scale garment manufacturing. But I think long-term, India is emerging as a serious destination for garments. Everyone realizes that this is a country which has a lot of strategic depth. We have a lot of labor pool available. And of course, we have political stability, which will help the country in the medium to long term.
Okay, well, some extremely disappointing news which is flashing on your screen. Vinesh Phogat is in fact disqualified from the final in the Olympics because she just weighed a few grams over 50 kgs this morning. Remember that she won against the Cuban wrestler last night itself. And this morning she just weighed a few grams over 50 kgs, which has disqualified her from entering into the finals. And that's extremely disappointing.
That's
extremely disappointing
quite disappointing.
News
in fact, everyone was celebrating the champion that she was in yesterday's games, and everyone was gunning for that gold at least today.
Or silver, whatever it was.
Irrespective, the first medal that would come by, especially with the journey that she's been through with injuries, etc., over the last 1 year or so. She was definitely holding on to all of our hopes and our best wishes as well. This is extremely unfortunate from a sports person's life perspective. I mean, a few grams over 50 kgs and you get disqualified from the biggest stage the world has to offer.
But you can't really take away from the kind of wins she's had. She's had 2 successive wins, one against the world number 1 and second was the Cuban yesterday as well. So you really can't take away from that. Despite this kind of disqualification, everybody knows her talent, everybody knows what she brought to the table. But Colleen, just wanted to understand about the capacity bit. Is it a near-term opportunity for India? Do you think that there would be an immediate shift to India simply because of the uncertainties in Bangladesh? Or is it going to be something which is probably going to be more stretched out and long-term?
There could be some tactical kind of movements for, goods which are very urgently required. But typically, the way the ordering cycle works in the apparel industry is that there is a good 6 to 8 month effort that a brand puts in to kind of set up a certain set of product categories with certain factories. So I think this has to play out more, as I mentioned, from a medium-term perspective. And there could be some tactical orders that move around for goods which are fungible or easier to move around, but it cannot be a very large quantum.
All right. How much do you source from Bangladesh, if at all, or your entire production is domestic?
So for Arvind Fashions, we are a very India, focused, sourcing strategy. So I mean, we would have a non-India component of anywhere between 10 to 15%. So it's not very large for us. We largely source out of India.
Okay, you largely source out of India. Just wanted to quickly touch upon your expansion plans in terms of store additions. And if you could give us a sense in terms of what you are looking at when it comes to your balance sheet as well, say in terms of debt as well as deleveraging plans.
Yeah, so, on expansion, as I mentioned, we will be opening more than 150 stores this year. Then another thing we are seeing is that more experiential, larger footprint stores are doing extremely well. So in the case of US Polo, we are now opening stores in the big metros, which are more than 3,000 square feet, where we can give the entire lifestyle with all categories. So whilst we are opening 150 stores, our average square foot per store has also gone up this year. So as I mentioned, this year we should be expanding our retail footprint by 15%. A net square foot addition of 15% on our base. So it's a year where we do see good amount of expansion that will be coming in. On the balance sheet, we are generating free cash flow now. So whatever free cash flows are being generated are leading to a reduction in debt. I think at an annual level, you will see debt levels marginally go down. They'll be going down by around 50 crores. So we'll be generating the cash and reducing leverage.
All right. Final question just before we let you go. You did speak about a couple of your emerging categories doing extremely well. I see 4 of them. There's footwear, innerwear, women's wear, and kids wear. How much do they account for in your overall mix right now? Or at what rate are they likely to grow going forward? At least 2.5x of your average?
That's right. We are around 20% of the company revenue now comes from these new emerging categories, and they are growing at 2 times the rate as the core business. So it is one of the good growth drivers. And we're excited with the opportunity. We're seeing that in a lot of these categories, the casualization trend is really catching on like it did in apparel. We are a casual wear portfolio. We're very strong in casual. And I'd say, for example, in footwear, as the business pivots to fashion sneakers, it's helping us a lot with our brand portfolio. So I think because of those tailwinds, we expect to gain market share in some of these emerging categories.
Okay, all right, Colleen, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Arvind Fashions. That stock is doing well. It's up around 2% at this point in time. Well, for the markets holding up steadily, so we'll take a short break. On the other side, we'll focus on a lot of these buzzing stocks which are dominating news today. Stay tuned.
The government is currently mulling over these representations that it has received on the budget proposal.
The old tax regime continues to coexist with the new tax regime, given the option to consumers, to taxpayers, to switch depending on what they feel they most prefer.
Amendment was moved in Parliament, and essentially what it does is that it gives people, like the current tax regime, the option to either avail of the indexation benefits or avail of the lower rate of tax indexation benefits wherever the option is the lower.
Welcome back. Big move on Bajaj Auto. Remember earlier there were flashes that came by announcing that the possibility there could be a couple of new launches in the Triumph variant, and the stocks moved to the high point of trade, has done well in general itself. But over yesterday and today we've been discussing the impact of Bangladesh on the Bangladesh unrest in India itself. And Ekta, You've culled out something about medical tourism too?
Well, yes, there is a Macquarie note which is written on it. They have said that the current instability in Bangladesh is likely to adversely affect medical tourism. International business segments of listed hospital chains could be impacted in the near term. So medical tourists from Bangladesh were around 69% of all medical tourism in 2022 versus 57% in 2019. So there's been a huge uptick which has taken place in the number of medical tourism tourists from Bangladesh. Now, international businesses, as we all know, for a lot of these hospitals is around 7 to 9% of revenue for the large listed hospitals such as Apollo, Max, Narayana, Fortis, Medanta. They say that estimated, based on estimates, the number of medical tourists from Bangladesh could be as much as 3 to 7% of consolidated revenue. So there could be an impact if in case there is that disruption which takes place on medical tourists coming in from Bangladesh into India. They have an underperform on Apollo Hospitals, target price of 5,040. Max Health, they have an underperform as well with a target price of 866 rupees.
All right, so that's about the Bangladesh impact on medical tourism. Take a short break, come back, we focus on the markets. Pritesh Mehta of Yes Securities joins in with some trading strategies. Stay tuned. Welcome back. This is the market at midday right now. The Nifty sitting with a gain of almost 272 points. The Nifty bank just below that 50,000 mark. And the mid-cap index, which is outperforming with a gain of almost 2%, has the street believe that maybe there could be some downside support for the frontline indices. The Nifty bank, as we speak, at that 50,000 mark itself, though it's been off highs, and crossing today's high will be extremely crucial for the Nifty bank from here on to see further, up moves and perhaps short covering as well, because the second half, we have the Nifty bank weekly options expiry that plays out. 50,000 call has, a fair amount of premium, close to 67 lakh outstanding open interest and 120 rupees premium, telling you that over 50,100, there is likely to be some sort of supply. Though at the lower levels, there is support around that 49,850 mark. That's the action on the 50,000 put and the 49,800 put as well, telling you that yesterday's close of close to around 49,750 to 49,850 would be an important support zone for the Nifty bank itself. If we break that, then maybe it's the 100-day moving average that we're looking at for the Nifty bank as the next key support zone. But for now, around 50,000, staying above 50,100 and crossing today's high would be extremely crucial. For the Nifty itself, that we've held on to 24,000 for a fair amount of time today tells you that, it's given a lot of confidence to bulls to go ahead and ride that 24,000 put. But at the same time, we're seeing some action at the 24,300 call as well for a premium of 90 rupees, telling you levels upwards of 24,350, closer to 24,400. We might face some sort of supply, and that coincides with the 20-day moving average on the Nifty as well. In terms of stocks, I'm definitely watching out for a couple of these discretionary names. Pidilite comes out with its numbers today. United Spirits at a record high. Fresh long positions added out there. And Granules, it may exit F&O ban given the open interest situation right now just around that 80% mark of the market-wide position limits. If it falls below that, then the stock may exit F&O ban.
Okay, all right. Thanks, Manglam, for that. Pritesh Mehta now joins in to discuss the technicals of the market. Pritesh, hi, welcome to the show. Well, the markets are pulling back further today. So in terms of an index, what would your call be? Would it be towards the Bank Nifty or maybe the Nifty?
See, first of all, we need to understand whether what kind of trend the market is in right now, because there are various noises coming in right now. Globally, there is chaos right now. But I believe that first of all, there is I believe it is not a start of a big correction, and we should not be talking about a corrective move right now, because when I look at the Nifty, mid cap 100, small cap and Nifty 500, I'm not witnessing the list of stocks with record 50-week lows. In fact, there is zero stock. There is hardly a percent of stock within Nifty basket record 50-week low. When I shorten the timeline, there are around 50% of stocks in the Nifty basket recording a month low. So I think when we look across the indices, we don't see stocks recording new lows. This is a good sign. It's a bullish sign of a market. So I believe that this trend is going to continue from here on. I think it is important for Nifty to go about 24,100, sustain about the same thing. Maybe then we can say the Nifty is also for ready towards 500 levels.
Okay, and stocks?
So I think we need to be with our performers. Pharma has done well over the last few weeks. And when I talk about Pharma, the leadership stock comes to my mind, Sun Pharma. We are talking about a big bullish candle. Thereafter, it turned into an anchor column. Thereafter, we have seen ABC breakout coming in. A move towards 2,100 is possible in this stock. The stock would be around 1620. Second stock that comes to my mind is the defensive one, Asian Paints, which is done extremely well. We are talking about the stock bouncing back from its 4-year mean. And I think a rally towards 3, 4, 5 is possible.
Okay, all right, Pritesh, we're going to let you go on that note. Thanks very much for joining in and giving us all of those strategies. Well, Cummins, the stock is moving higher post the conference call. It was up only around 4-odd%. It's now moved to the high point of the day, up around 6-odd% at this point in time. Says that they are at an inflection point and this kind of growth can sustain for many years. So a lot of bullish comments coming in from the management, which is driving the stock higher. But here is some important opinion from Chris Wood of Jefferies. He has turned tactically cautious on India, given surging retail flows and extraordinary resilience of Indian markets despite capital gains tax hike and election results. He adds that India is the best equity story in the past decade, but calls for more correction in the Indian equity markets. Listen in.
Now, India has shown remarkable resilience in the last week, or in fact, it's shown remarkable resilience in recent weeks and months. As for the Indian stock market, is being driven first and foremost by domestic flows. So what's interesting about India is foreigners are barely over. We don't believe foreigners are even overweight India anymore because of the big rise in the India's neutral weighting. We've had huge flows on the part of domestic mutual funds and retail investors into the Indian stock market. So the resilience on the capital gains tax is more surprising to me than on the election. And then we had the resilience demonstrated over this BOJ-triggered correction we've seen in recent days. However, I have to say that tactically I'm a bit cautious on India, but it has been extraordinarily resilient. So if I was investing, if I had a mandate to invest $100 in India right now today, actually I would only put in 1/3 of the amount because the overwhelming likelihood is we need to see a bit more of a correction. But fundamentally, India remains by far the best equity story in this region and globally on a 10-year view. And the fact that it's being driven by domestic money and not dependent on foreigners is extremely positive. It also means that any major correction in India, the foreigners will buy because they're underinvested in the market.
Foreigners will buy any large dip in India. That's the last word coming in. We'll take a short break. We'll connect with Vishal Manchanda of Systematics Group to decode the Q1 numbers of Gland Pharma and Lupin. Stay tuned.
Welcome back. You're watching us here on Halftime Report. The big event tomorrow to watch out for will be the Reserve Bank of India's Monetary Policy Committee, expected to leave repo rates unchanged at 6.5% for the 8th consecutive time. A CNBC-TV18 poll shows that across the country's top economists. Ritu conducted that poll and joins in with the findings of that poll and what to expect, or what the industry top leaders expect from the RBI tomorrow.
The big miss on US jobs data, rising expectations of a rate cut from the Federal Reserve next month, the unwinding of yen carry trades, all of these global events are going to weigh on the minds of the MPC members. But as the governor insists, it is domestic cues that are going to guide the RBI. The focus this time around is going to be on inflation commentary, with food inflation reigning at a 6-month high, as well as around the recent regulatory guidelines, specifically on the liquidity coverage ratio, whether there is any rethink at all, the scramble for deposits, the widening credit gap ratio, all of that are going to be focus areas. Now, according to our poll, 100% of the respondents expect no change on rates, given the persistent concerns around inflation on one hand and the continued comfort from growth on the other. The stance of the policy is also widely expected to be left unchanged at withdrawal of accommodation. Now, half the respondents to our poll expect RBI to signal a stance shift only by October, and others even later. Our poll also says suggest that the window for a rate cut may only open by December or maybe even early next year. Now, most of the respondents to our poll said they expect the total quantum of rate cuts in this cycle to be around 50 basis points, with a third even expecting a 75 basis point cut in total. But no change is expected on the average CPI forecast for this fiscal, at least in this policy, with RBI reiterating its commitment to get to that 4% CPI mark, and even the current growth forecast is unlikely to be tinkered with. Now, the governor's statement that the markets focus on, that is expected to be more or less even, no big change from last time. So a status quo policy for the 8th consecutive time with a split vote on action. And also keep in mind, this is also going to be the last meeting for the 3 external MPC members whose tenure comes to an end in September.
Right, Ritu, thanks a lot for that. With that, we'll step into a short break, come back, get you more on the markets and a lot of stock-specific action. In fact, before we take that short break, pick up, something like a Pidilite, which is doing well in today's trading session, up around 2% ahead of its numbers itself. What is it that the street is anticipating this time around? Revenue and volumes may be impacted by election-related disruptions. That's something that we've seen in a lot of these other building products companies. Asian Paints saw revenue decline of almost 2%, 1.5% for Kansai Nerolac as well. Margins, however, will improve on contained raw material prices. The company may increase its investment behind advertising, given the safety that it will get from raw material prices on margins as well. What are we expecting? 6% revenue growth on a consolidated basis, just shy of that 3,500 crore mark. The EBITDA grows by about 9%, a 770 crore number compares with 707 crores. That implies a margin of close to 22.2%. Again, absolutely in the middle of the company's guided band of 20 to 24%. And the net profit on the back of a 9% jump in EBITDA grows at around 11%. You're looking at a number of 526 crores. What is it that the street is working with in terms of consumer business volume growth? Could be anywhere between 7 to 8%. Double digit is something that, the company usually targets, but given the softness in the sentiment this time around, it could be a difficult challenge to get to double digit. Gross margins may expand by about 350 basis points. Vinyl acetate monomer, VAM, as we know it, as their key input price, has seen a further decline versus what the prices were in terms of the fourth quarter numbers, and incremental cost savings, we understand, would be spent in marketing and market development itself. So that's about Pidilite. Now take a short break, come back, focus on markets and a lot of other stocks.
Welcome back. Well, for the markets, the mid-cap index is picking up pace, so up around 2% at this point. We have the Bank Nifty, which is up around 0.5% as well. So doing well currently for the markets. But a couple of stocks stand out. So, for example, Gland is sulking today post numbers, though it's recovered from the day's low. And we have Lupin, which is much higher post what was a very good set of numbers. So to talk about this, we have Vishal Manchanda of Systematics Group joining in with his quick take. Vishal, welcome to the show. Just wanted your thoughts on Gland. It was a disappointing quarter, margins up 20%. What do you think the street was mainly disappointed about? Was it the US market decline or was it these margins because of Senexi?
So, Senexi is a fundamental problem for Gland in the short term, while I think in the medium term, this one may be important for Gland to drive revenues, but I think short term, this might be a disappointment. US, we all know, so Gland hasn't launched any large product in the US in the last few quarters or even a year since. They haven't launched a large product. So earlier, what we used to see is they used to have a large launch in the US every year, and we haven't seen that. So probably the margin expansion will come only when we see that happening in the US, and that has to happen in the near term to take care of the Senexi pressure. So I think we'll have to wait for some time in Gland Pharma for things to really pick up.
Right. If I remember correctly, I think your stance was a little positive on Gland, Vishal, earlier.
So I haven't put out a rating on Gland as yet, but I used to have a coverage on Gland earlier.
Okay. And what about Lupin? That's a big mover today. You like the numbers?
Yes, numbers actually surprised everybody on the street, and they had a good show across markets. India especially was something unbelievable, 17-18% growth YOY. So that was very strong. Even North America was better than expectation on a sequential basis. India is something that surprises the most. We can't really make out what actually drove those numbers, such high numbers, because the market isn't really growing that high. And if you ask companies, they either expect to grow 100 basis point, 200 basis point above market growth rates, and this time they are almost twice of what the market grew at.
Okay, all right. So that brings us to the question on whether this kind of growth is sustainable for Lupin, Vishal. One, and two, the stock has already run up. It's, up 50% this year itself. So would it be a buy at these levels?
So we have a sell on Lupin, but the numbers certainly are above our expectation. But I would say I don't really expect the growth numbers in India to be sustainable. We probably think this would either be some temporary phenomena. It could be channel filling. They have recently initiated the trade generic business. Potentially, there could be channel filling on account of the trade generic business or something else. But I certainly feel such numbers may not be sustainable for India markets, looking at what the market is growing at. And we all know North America is not a structural story. Lupin will have opportunities coming in, going out, coming in, going out. So we'll not see the base really moving too much from where it is today. But they'll be able to maintain a portfolio of high value products, which should keep the margins higher.
Okay, well, Vishal, do you look at hospitals?
No, I don't cover hospitals.
Okay, well, even from a larger perspective, from a non-coverage perspective, you don't look at it.
Yeah, I don't really track hospitals too closely.
Okay, all right. There was a note about how Sun Pharma might be impacted because of this whole Bangladesh issue, but it's a very negligible kind of exposure. Any other pharmaceutical stocks which could be in focus on account of what is taking place in Bangladesh?
I would only say that there is some amount of parallel imports that happens from Bangladesh to India for innovator drugs. So among the innovator names, AstraZeneca is one which is impacted by parallel imports from Bangladesh to India for some innovator drugs. So I think AstraZeneca may be favorably impacted, while from a negative impact perspective, it will be negligible for most things.
Okay. All right, Vishal. We're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us your quick perspective. We need to take a short break, but Manisha Gupta will be with us on the other side. Peter McGuire will be joining in to discuss commodities. Stay tuned.
earlier overreaction that it had seen. One of them is Marico's. Marico's moved to the high point of trade. Remember, it was down 7% yesterday because of its exposure to Bangladesh, which was a little bit of an overreaction, largely because the exposure was about 10 to 11% of sales, and analysts believe that it could not impact their sales by more than 1 to 2% for this year. And add to that, the numbers of the company were pretty good, and a lot of long positions were added before the numbers, and maybe a lot of unwinding took that stock lower by about 7%. We're looking at Cummins as well. That continues to move higher. Remember, it was just about 5 or 6 days ago where the stock was down by almost 8% on account of weak commentary coming in from the global parent. And now the management has gone ahead and clarified that the global commentary does not apply directly to India. And in fact, in India, they expect to grow 2 times GDP, which is 13 to 14% growth on a sustainable basis itself. So after that big decline a couple of days ago, that's coming undone, and the stock is continuously surging up around 8% on very, very positive management commentary coming in out there on Cummins. The other group of stocks which are doing well are these consumer discretionary names which have found some push in today's trading session. Case in point, something like a Trent reports its numbers day after tomorrow. That's moved higher. We've been talking about how United Spirits has hit a fresh record high, so that stock continues to do well. And we're also seeing some traction in a name like AB Fashion and Retail. So those are a bunch of stocks that have come about as well. Ekta.
Well, that's what's taking place in terms of the equity markets. But let's get a quick handle in terms of what's taking place on the commodity side. We have Peter McGuire of XM Australia joining in with a commodity update for us. Peter, hi, welcome to the show. If you could just start by giving us your, outlook in terms of crude prices. They've edged lower on what has been a surprise build-up in US crude and gasoline stocks. So give us a sense in terms of where you are anticipating crude to go from here.
Well, good afternoon. I think there's so many different components of it. I mean, when we're looking as far as the market's washed itself out, and it's, I think, structurally very oversold. But that's just it's a point in time, considering global demand is relatively okay. But I suppose the viewpoint moving forward is the geopolitical concerns, which could certainly impact price in the short to medium term if things were to escalate, on a large scale. And that seems to be, I think, everyone's sitting to see whether the next shoe to drop is going to be crude. But at the moment, I think there's every chance you could see even a couple of dollars of further softness. But we've just got to see how, from a geopolitical front, how that all, melds into the market.
Peter, would you also say that much of the profit-taking or the correction that had to happen in crude oil prices is done now? Do you see any support coming in? Because there was an interesting Goldman Sachs report suggesting that the Brent wouldn't perhaps decline below 75 anytime soon.
Well, exactly, Manisha. I mean, I think that that's probably getting to that point of that inflection point. And I can't believe that for a market that is normally so dynamic, it's been the sleeping giant. It really hasn't done anything other than, continue to, edge lower each and every week over the last probably month and a half. And it just doesn't have it's lackluster. So, yeah, probably that 75 handle, what they're saying is there's probably a line in the sand, and that could be the point. So it'll sit around there, and I'm not expecting anything dramatic unless you see something happen from a global standpoint as far as rates, Fed policy, or, of course, geopolitics that washes over it.
Since you mentioned about Fed policy, Peter, I mean, various central banks have moved in sense of rates there. US Fed is yet to dump that 25 basis points factored in. What are you anticipating for the rest of this year, especially for the month of September, December, and what the US Fed could do?
Well, I think first off, you're looking at the big banks, Manisha. They're saying 50 basis points is pretty well baked in. It just seems to have, again, ratcheted up in the last, week and a half. And that's the likes of Citi, Goldman. So I'm probably, erring on that camp. And then you're looking at, do you see another one in December of 50 and then 25? And they're saying it could be at 125, and even they're tailing that back now to 110 basis points of cuts. The other side, of course, is that you're less than 3 months now from an election, so that interference component that could be interpreted from many pundits and certainly the political base. So, yeah, there's, I think, plenty of fireworks ahead in September, and I'm looking forward to seeing how that impacts the market. What we've seen in the last couple of days, I think you've got to just shake your head and go, well, anything's possible.
All right. Peter, how are you looking at the base metal prices? Because this is another area which has constantly gone in for more correction. The month of June wasn't so great. July was in the negative, and August continues to see those losses getting extended.
Absolutely, Manisha. Just, structural weakness as far as price. And it's just, you've got copper now under 9,000. You've got aluminium, tin, tin's under 30,000. Aluminium soft at 2,300. Zinc soft. So I really look at it and I just go, wow, it's a time to be, it's certainly a time to be short on the LME. And the other side of it is, wait to see where the market trends over the next matter of 4 to 6 weeks. I think there's still going to be plenty of dynamite ahead over the next couple of months, Manisha. So, hold on and hang on to your hat.
All right. So are you anticipating further declines from here? If yes, then by how much? And would you be a buyer at these levels in any of these metals?
I think a little bit further softness. There's so many moving parts to this that we've really got to, I suppose, consider. And, US dollar strength, interest rate policies, what's going on with Eurozone, where's China play in all of this? We understand, the prime rate, they're trying to, re-stimulate their economy. Global growth is pretty patchy. And I think at the present time, maybe there is a little bit further softness. I'm not buying at the sometimes it's a time to sit on a deck chair. And at the moment, I'm sitting on the deck chair.
All right.
All right, he's sitting on the deck chair. And how chuffed are you about your performance at the Olympics?
Well, we're pretty chuffed. It's not too bad, is it? I mean, it's been a fantastic time for 26 million Australians.
Yeah.
Well, we're out here at the time mourning the disappointment that came in from the Olympics committee, where Vinesh Phogat, our gold probable champion, was disqualified for just being about 100 grams overweight out there. But we'll let you have your moment, and hopefully we'll come around to the next couple of Olympics as well. And when Neeraj throws that javelin, we'll all watch Peter along with you.
Thank you very much.
All right. With that, we're out of time on this edition of Halftime Report. Thank you so much for watching. The team of Business Lunch takes over next.